welcome to Rockstock Channel. It is Friday, November 4th, and we're very happy to have for the first time Jean-Sébastien Lavallée, the CEO of Critical Elements. We've had your colleague and chairman, Eric Zonscherb, interviewed on many panels over the years, and I've seen him do a number of these other interviews, but Critical Elements had very substantial news this week in essentially getting fully permitted in Quebec, a project that I've been aware of for, I don't know, over 10 or 12 years. This is a Lithium 1.0 story, the Rose project that you've been involved with, JS, I think, since inception. You could talk a little bit about, the management team, but it tweeted that you're one of the best kept secrets in lithium, unlike others out there that promote a lot. You've been pretty quiet. I'm a shareholder. We're an advisor to Critical Elements. I've come to know some of your other shareholders. You've had a very loyal shareholder base. You raised a bit of money late last year, I think around this time, 30 million, plus, after getting your federal permit over the summer. But the stock has had some permit fatigue, for the past 14 months because we thought the provincial permit, given Quebec is so favorable a jurisdiction, you thought we would have had it, a lot sooner than we did, but you did get it over the line, and that's major news this week. So there are very few projects that are fully permitted, and you're a plain vanilla hard rock project. And there's been a narrative shift or back to conventional, hard rock stories. If I look at the scoreboard, you're number 18 among the developers, but increasingly rising on the scoreboard have been, hard rock spodumene. So we've called this, you've sealed the permit, and Seal has that great song, Kiss, Keep It Simple, Stupid, from the Rose. Kiss from the Rose is the title of vodcast, and Rodney's here. We're both going to kind of raise some questions to kind of go through it, but let's just start with the project. The project it's a plain vanilla spodumene project that has, $357 to $400 million Capex, and you are now in a position to get that fully funded, in construction, and in production before 2025. So let's kind of discuss the project and, the path to realize that spodumene software dream. If you own your own rock, you're God, according to Chris Ellison of Mineral Resources. So JS, take it away, and just introduce yourself a little bit about, and then, the project.
Yeah, but I think you introduced myself already, but just to remind people, I'm a geologist by training and coming from mining family, being involved with Critical since the discovery of the project late 2009. I've been working on all the development, initiating the permitting process where we filed the EIS. That's been a long process. And this week we received a certificate of authorization by the provincial and COMEX. That was a major milestone. Our goal is really to, let's say, bring a strategic partner in the project financing where we'll receive a significant amount of equity, part of the Capex to build the project. In exchange, it will receive offtake for spodumene. So that's a discussion that is ongoing. But now that we have the certificate of authorization and the approval by the federal, we will be able to really to accelerate these discussions for the project financing.
So that's great, and we definitely want to go into how you're going to, the thought process on how you're going to do the financing, and the fact that you have been waiting for this permit, the final permit, for some 14 months after the federal permit, at a time when spodumene and broader the chemical prices have been rising aggressively, and there's been an increased kind of like panic and desperation on the side of off-takers. I imagine your phone has been ringing off the hook, and your dialogues have been able to advance to a relatively mature phase, but unlike your peers, you've not signed any offtakes. You own 100% of your project. You've really just been, waiting to get this to be in the appropriate position to negotiate these. But tell us about the project. I think you're very, undervalued relative to your NPV, relative to your peers. But could you explain how that is? What are the project economics? How much you're going to produce? and we'll put up a couple of slides from your deck as you walk through that.
Yeah, mainly if we look at the economics are from the study that we released in June, then filed the technical report in July. We're looking at the Capex of $357 million US. So mainly we're looking for $400 million US to build a project. And the NPV after tax 8% is about $1.9 billion US with IRR of 82%. So all that is based on a chemical grade spodumene price of $2,500, 6% up to 2030. Then 1,560 onward for the, let's say, for the rest of the production. So it's pretty strong economics. We plan to produce about 173,000 tons of chemical grade 5.5 per year, and about 51,000 tons of technical grade 6% for the specialized glass and ceramic industry, plus a byproduct of tantalum. It's about 200,000 pounds a year that will be produced in terms of tantalum.
Okay, so that's between the chemical grade and technical grade, it's about 75% chemical grade and 25%, for the glass and ceramics market.
JS, our latest forecast pricing deck for spodumene concentrate, 6% at any rate, is above your feasibility study numbers. So we would probably see higher IRRs and EBITDA than you've had. But with that said, do you think there's been any shift in construction and Capex cost versus your feasibility study estimates?
But the study is pretty recent. Let's say we release it in June. All the quotation for the equipment were up to date. What we're seeing is some kind of stabilization in the equipment cost. And we're seeing also a lot of the large project of construction slowing down. So yes, labor costs going up, but the entrepreneur cost seems to go down a bit. So I'm not seeing a big difference between the number we put out in June versus today. Maybe a slight increase, but that, at the end we're looking for 400 million. That is already a bit more than what we have in the Capex for the study. So we should be well covered with it.
Okay, great. So then on that basis, then we would come out with a higher NPV than where you are now, given our deck. Our deck is a bit higher, and our long term I've just upgraded now to just over 2,000 a ton, and you said 1,560, I think, past 2030.
Yes, we use 1,560 past 2030.
In terms of market timing, obviously it couldn't be better to be moving the project forward. In your discussions, if you could sort of give the listeners an idea, what in your mind would be an ideal partner from a partner or an offtake partner, what would that look like? And what would you be looking from them, if anything, as far as technical skills? Is it all just, funding for Capex in one form or another?
Well, the first important point, we need a partner that will have a line interest with us. So that's why it's important, not just for the project financing, but to have a partner let's invest a significant amount of equity in the project. That's important to make sure we're aligned on the development. Then, if a partner can also bring some technical background, technical expertise, that's another important point that we're looking. We're focusing more on North American partners and European partner for the development. And if someone can also bring, let's say, expertise for downstream project, that's also some advantage that we're looking. But the first criteria is to make sure that partner is aligned with an investment in the company and in order to get an offtake.
You're focused on producing spodumene, and that's the feasibility study, and that's what you're looking to finance. But the story of Critical Elements has always been one of optionality, and you have a feasibility. You've built pilot plants, I think, for carbonate. You've tested hydroxide with Metsu Outotec, which is a process some of your peers have also done. But in terms of optionality, you're saying, you mentioned a partner wants to bring in, you want a partner, to have bring in cash at a project level. I guess, how many partners, how many customers do you think, you might have? Like, is it possible that you could have 2 or 3 funders and then sell, the bulk of your product, to them, almost exclusively, with getting market prices? But like security of supply is critical. Again, there are very few projects that have 100% offtake to give. I would think you could have more than one partner, to fund the whole project.
Yeah, like, we kept the optionality since the beginning. That was a very key element. Waiting the permit before entering any offtake. That's the way we plan to fund the project. Yes, like, just because we'll produce different material or different specification in terms of spodumene plus the tantalum, we'll probably have more than one partner. As the bulk of the volume is a chemical grade, we're mainly looking for maximum, let's say, we'll say 2 partner for the chemical grade. Ideally 1. More than 2 is difficult, in our opinion. It's not just straight offtake, it's offtake with investment. So we think 1 partner for chemical, probably 1 or 2 for technical grade spodumene. Then in terms of volume for the tantalum, will be probably 1 partner or 1 offtaker for that material.
But if you have 1 partner for the chemical grade, from a financing partner point of view, are you also contemplating they would take all of 1 or 2 would take all of the offtake, or would they finance like 100% of the equity and get 50% of the offtake, so you still have some other offtake to be able to sell on the open market or to other customers?
I don't want to go too much in detail as I can, but let's say we always been working to keep like flexibility and option open. That I will say that our focus is to get 1 large partner that will fund a good portion of the equity, maybe all. I cannot go in all details, and until we finalize an agreement, we don't know yet exactly. But the objective is to make sure we're getting a significant part of the equity to minimize dilution for our shareholder and bring much value possible.
And just, Jace, I mean, in terms of a question you possibly could tackle, the technical grade spodumene market is often overlooked, but it's a key one, and there are very few people that meet that spec with a low iron. Is it possible that you would sign independent offtake contracts, because that is such a specialist market, that you would do a separate deal just for the technical grade into into those markets?
Let's say the end users of that material are completely different. So yes, that will be a completely different off-takers. So yes, it's fully possible. The market is so tight that I can see that there's probably group that will be interested, even if it's technical and they have to pay higher price to take it. So let's see, because there's no material, and having that volume, that's 50,000 tons, 6%. So if you put that into, let's say 5.5, that is more the common grade for chemical. It's another that will bring us to 240,000 tons if we go for full 5.5. That means 25,000 LCE. So yes, there's interest. There's optionality, like we mentioned before. We have all the option open, and we are keeping it open until we finalize that strategic partnership.
This is like largely the glass market, the Gorilla Glass, and that particular market, Albemarle is essentially, through Greenbushes, has a monopoly, right? So people don't know that much about this market. Companies like Corning, Asahi in Japan, Saint-Gobain, I think, are big glass companies. People think of lithium, they think of the chemicals, they think of the auto OEMs and the like, but it's these specialty glass that's in a lot of the same applications that the batteries are, but very few companies can tap into that, and then the pricing in that market has always been a premium. Could you talk about the pricing of that. So when we see 7,700 SE6 equivalent as the last, Pilbara BMX bid, what price would that mean for, your technical grade for the glass market?
Yeah, the pricing for tech grade market is linked to the carbonate price mainly, because the users can use carbonate price, but they way prefer to use spodumene concentrate because there's already the mix with the sand, with the silicate, some magnesium in it. So they way prefer spodumene, but as there is no spodumene available with the specification need, that means less than 0.2% iron content, they can replace it by lithium carbonate. So if they replace it by lithium carbonate, that means that the price is linked to that ratio. So if you put that ratio from carbonate to spodumene concentrate, you need to apply, let's say, the conversion that is, let's use by example 8 tons of concentrate for 1 ton of carbonate. So you just divide the price of carbonate by 8, then you will get your tech grade price. You can apply a small discount if you want, but that's mainly the way you make the math for pricing for tech grade spodumene.
So carbonate prices are pushing 80,000 divided by 8. Technical grade will trade at 10,000 when SC6 is trading at close to 8,000. So, a 20 to 25% premium.
But that's the ratio with carbonate price, and that's the ratio we use under DFS for the tech study. That's the market.
Okay. So that's very attractive. So when you look at the 173,000 chemical grade, it's probably right to convert it the way you did to 240,000, 6% equivalent, which is 25,000 tons, I guess, LCE. So anyhow, okay, go ahead, Rodney. I mean, this is just the basic project that we've always said, 20,000 tons for 20 years. In spodumene, you have companies like Core, which have a much shorter mine life than you have, and they have north of 2 billion market cap. You're sitting here, at a 300 million, market cap. So that for listeners here who are familiar with Core or familiar with Sigma and have seen those re-ratings, again, you've been a quiet, off the radar name, but there's lots of opportunities on our RK Equity scoreboard. Not financial advice and the like, but we haven't spoken about critical elements for months because of this kind of just overhang on the permit. If you didn't get the permit, it was kind of like, okay, there's a lot of potential downside, but now you got the permit, and the market needs to get educated, about it, but also not to worry so much about, equity overhang, from a dilution point of view. Like how much did you raise last year, and how much money do you have now?
We raised about 30 million in December 21. We have close to 25 million in the bank right now. So
25 million in the bank. So you have plenty of time to wait to get, an appropriate valuation in these offtake negotiations. I mean, you're trading at 30% of your NPV just for this project, and Rodney is going to ask some questions about your exploration upside, because there's lots of Quebec exploration companies that have been making good hits, and the market's giving you zero value for that. But there's no, to anyone kind of like watching this, or anyone who you've spoken to, on Bay Street, since this news came out, there's no imminent, bought deal just because you got this permit, or any type of financing. You've waited 13 years, you've waited this long, you've been very judicious in not issuing too much equity, and you're pretty much done. You have a lean team, you don't have a lot of cash burn. So you're in the catbird seat, I think, to negotiate over the next few months, an appropriate deal. But inevitably, an auto OEM or anybody looking to negotiate a deal with you is going to look at your public equity price and say, well, okay, that's the market's valuing this. Like, how do you deal with that negotiation from a valuation point of view when talking with them? If they invest at a project level, you want to get a significant premium or much closer to NPV than where you're trading. How does that dynamic work?
Well, let just answer the first question. No, we're not going to do any deal right now in terms of raising equity. We have the money we need to achieve what we have to do. The focus next step is really to get the strategic partnership. We have the money to go up to there to advance the detail engineering and do all the work we need to do to be ready for the construction. So there is no deal. Then our job right now is really to make sure that people knows the story and to close that gap versus, let's say, market value versus NAV value. We need to shrink that gap. But in the meantime, the valuation, let's say in terms of discussion, as I mentioned before, the market is very tight. There's a real need for security of supply, and there's a value in that project. If we need to wait a bit longer to get the right deal, we'll wait. You mentioned we've been doing that work for 12 years, 13 years now to develop the project. We're probably one of the only one in North America that have the authorization to move forward for the construction. So we'll work to close that gap, and we're confident we'll get the right partner with the right price for shareholder.
Jay, it's just one thing I was going to ask in terms of the mix of the funding. We've just had the IRA announced in the US, and EV tax credits and the 45s, all the tax dispensations and benefits. Is there any prospect of Quebec or the Canadian government giving some kind of soft funding or a grant or what have you to you?
We'll see. There's a lot of things that changed, I will say, over the last couple of weeks in Canada with the different announcement we heard about like some different investment. We're hearing that there will be some possible funding mechanisms. The nice thing in Quebec, we have local institutions that are really supportive. I'm sure you saw like all the announcement in Quebec with the provincial and the battery hub in Bécancour, and we saw the large companies coming and building plant there. I'm sure there will be let's say some program available, but at this point we're not focusing on, let's say, putting our focus on it, but we're evaluating all these programs.
I mean, to use the US example, Albemarle, is very far from being permitted in North Carolina to restart their Kings Mountain mine, but the US government wrote them a $150 million grant of free money, okay, for a project of a similar Capex as your project. So like, I'm just wondering, to level the playing field, is the Quebec government, is the federal government going to start writing, grants, low interest loans, or, investment tax credits, like on the Capex side, this 48C and 45X, which we've talked about on Rockstock channel, could lower, the Capex by like 30%, and 10%. So I know there's been movement over the last few weeks. I saw they're forcing China to disinvest, from 3 small lithium companies. Those are sticks. Are the carrots coming?
Yeah, but we're hearing that there's, let's say, different credit that will be put in place for, let's say, critical minerals development. Still, these things are really new, so we need to review all these programs. There's already a program for exploration for critical minerals where there's more credit. Looking at, let's say, what Biden administration just did, we all hope that the federal will do the same here in Canada. So we're evaluating these things right now. But
how will you finance the debt absent soft loans from the government? Like what percentage, of debt, and what type of debt? Could you do a streaming deal, a prepay? Like what are you thinking about the non-equity side?
we're looking like 50-50 debt equity, maybe a bit more in that. That will depend on the terms for the offtake. If there's floor price, if there's take or pay in the offtake, that will give us, let's say, more flexibility in terms of the debt. There's also, let's say, support institution in Quebec and in Canada where we can also get them involved, let's say, in the syndicate. We're in different discussion. I cannot go too far in these, like what I can say on these discussions. But we have several options on the table for the debt.
We've seen SocGen, Societe Generale, have a 5% loan deal with Sigma, and BNP Paribas similarly 5% loan deal with Pilbara. Is that the type of structure that you're talking about? And interest rates have risen since those deals were struck, so maybe the interest rate's higher, but is that the type of traditional project finance loans that you're talking about?
Yeah, that's more the type we're looking, like a traditional loan for project. Even there's other possibility. We're keeping, like we've done for everything, all the option open. Then it's really when we'll get final partnership that we will be able really to finalize and put all the piece of the puzzle together. We're trying to work all that in parallel to make sure it will be, let's say it will be easy to put the puzzle in place. So that's a lot of things to be managed at the same time. But yeah, that's more likely the route we're looking. Can also be, let's say, a strategic loan. That there's different things we're looking. You mentioned we're not going to look at royalty or stream. It's expensive. And in that kind of market, there's no reason to go with that kind of funding. Prepayment prepayment is interesting, but I put that on the balance sheet. So when you do prepayment, you need to be fully funded in the same time. So everything needs to be put together in the same time. I'm not saying we're close to it or open to it. That can be part of a structure. There's several structures that we can work.
Okay, but you said strategic loan. We saw Ford lending 300 million to Aussie to Liontown. So not going to ask for more detail, but that sounds like that could be one of the options as well.
Right. If we're seeing it with others, I'm not, why not?
Exactly. Ford is starving, for feed. So everyone is starving, so it very, very exciting to watch this play out, because there are very few, like Liontown is still years away. You are months away from, like, what's your timeline to actually finalize this financing, assuming the equity rises to the appropriate place, or the terms of the offtake are to your liking? What's realistic to finalize it and start putting shovels in the ground? And then what's the path to production?
Let's say the target to put shovels in the ground is in the spring. We're talking about, let's say, April time, meaning going for cutting the trees and stripping the overburdens in order to be ready in the summer to pour concrete and put the building up. So if we want to go in the April time, that means that we have objectively, let's say the objective is to get everything in place by the end of first quarter in terms of project financing. That we're looking at different step on it, let's say strategic and debt. Then if we need to do a small equity raise, but maybe there will be no equity raise, but it will depend on that first step of strategic. So if we want to attach all that to be ready for the construction in the spring, let's say the site preparation, we need to close that by the end of first quarter. It might happen before, because that's been active since a long time in terms of having discussion and working with different strategic, but the objective, to get that done by the first quarter, end of first quarter. But we're not in the meantime like in a rush to do it.
I understand.
We've been patient, so we'll make sure we do the right deal.
Yeah. Might you consider, there's a number of like unfunded kind of merchant, converters in Europe, like Galp and Northvolt, that have these plans on the drawing board, but they don't have any spodumene. I mean, are you focused on just financing spodumene and selling it like as soon as you can into the current market, or could you partner with one of these groups and then possibly take some equity stake like Pilbara, has done with POSCO, in a downstream hydroxide converter in Europe or the US?
We're flexible. The first step, in order to be able to do conversion, you need to get spodumene. So that it's always been our focus to build a mine and produce spodumene. We've done a lot of work on conversion, to get, let's say, a good understanding of our spodumene concentrate, also to test it, to understand the process, to control, let's say, have a good control of the process. We've did an engineering study, but like we mentioned publicly, and it's not like there's no decision taken at this point. The focus is the Rose project, building the mine, producing spodumene. We want to start by walking before we run. Depending on the strategic partnership, we're not close to go into conversion at some point, but we cannot commit to it now, because it being a decision that been taken, let's say 2013-14, that we will go with a two-phase approach. Right now, that's one phase for the moment because that decision is not taken, but we want to control the risk. That's very important. So financial and execution risk, we saw the project having like big problem building two large plants. So we think building a mine is already a big project. We'll do it. And then when we are generating cash flow, everything's possible. We talk about exploration assets before. That's to go into a conversion plan. That's a big investment, and you need to get enough supply to supply that plant for at least 25-30 years.
So that sort of leads into my next question, Jace, is you've got a substantial, extensive drilling exploration program. I think it's 25,000 meters.
Yep.
And I've always thought that there's very prospective ground around Rose. So I guess the question is, if you find something substantial and a new resource, then what would be the next steps to be allowed to mine that? What would you have to change? Because that, of course, could then give you the feed to do different and more bigger things.
Yeah, but exactly, having more reserve, or let's say resource or reserve, will then give us again more optionality. So then that can lead for that decision at some point, but like we need to drill it first. But that program, we start in the summer. We've done a small portion of it. That should accelerate in the winter as the access is way easier. It's more effective. It's more cost effective. But we have planned to drill for the extension of, let's say, of Rose. Then also at Lamar, where we got in the past with some drill holes that one of the company that optioned the project in the past drill some, let's say, very good intercept there with our grade and Rose, I will say. So that's one of the very interesting project that we want to drill. It's probably the one that we focus the most to delineate initial resource. And also, you said that like a few weeks ago, we announced some results of not a very extensive program, surface program we've done, but we kind of visit some target that were developed with Goldspot, where we find new showing with lithium or the association lithium and lump cesium. So it's very interesting. One of them is right west of Nemaska Wabushi project. And we have a trend of 2 kilometers with different value there that we need to revisit it, but it's pretty exciting to that with very minimum amount of work done there. And in terms of surface exploration, we already identify that sector, plus we expand the trend at Lamar. But yes, it's in line with what you're saying in terms of going into conversion. If we can develop more resource that can at some point justify to enter that step.
So what would you need to go through in order to expand production? Would you need an adjusted permit, or what would be required?
You mean to increase capacity? Yeah, you apply for an adjusted permit, but don't worry, it's not as long. It should not be as long as it's been for the first
it's
one.
always, once you're in production, it's always a lot easier. But I'm just saying you would need to make some change.
Yes, but in the meantime, look, the Lamar project is west of Wabushi, so that may be another a completely separate project. You know? So it's difficult to say it today what it will be exactly. We need to do the study, but let's start by getting the drill turning on it and get the resource, and we'll see after.
When I look at the slide deck and what have you, there seems to be a lot of infrastructure available near Rose. So would it be fair to say that you could expand production with not having to, re-spend on quite a lot of the infrastructure that you put in now?
Yes, because look, let's say if we expand Rose in terms of capacity in future, if we, let's say, expand the reserve and find a new zone at Rose, there will be no change in terms of the office or the garage or the power. There is no change. The capacity of the crusher is mainly already there with that design. If we increase, we can maybe, depending on the ore, as we will have flotation line for the Rose material, we can maybe just add a DMS line, then we can float the fine after. There's different options. So having airport, road, power line, having all these infrastructure is saving already a lot of money in the project, and that will help for future.
I did see in your slide deck you're hoping for 2024. So is it fair to say that the end of Q1 is kind of where you need to be for FRD?
Yeah, let's say end of 2024 we'll be starting to produce few tons. We'll be more like in the commissioning, ramping up at that point. So yes, there will be few tons and tweak and some like ramping up. But
your construction period is how long roughly?
It's roughly 21 months.
Okay.
So if we start in April,
2025, the real revenues and full capacity, ramping to full capacity, assuming you get funded in Q1. I think there should be. The only uncertainty in my mind of your getting full funding is whether or not you're willing to fund it or to accept the terms based on where the stock is, right? Like you hold the cards basically you're in the catbird seat. There's no desperation whatsoever. And again, I think we could wrap it up pretty close here. I mean, you're a 300 or so million US market cap. That's been relatively quiet. You've plodded along, not super fancy, but plain vanilla, conventional wisdom, keep it simple, stupid, right? It is, the spodumene software, the market is in desperate need for spodumene units, and there's very few permitted near-term producers of product, and now you finally got the green light. The provincial government has essentially said you're after North American Lithium restart, you're next in line. And Livent in their quarterly call 2 days ago was very upbeat about Nemaska. Like they finally gave some detail about that. So that's 3 projects that are advancing, quite rapidly to be in production 2020 in North American Lithium's case next year, in your case, starting in 24 into 25. And I think Livent said they're aiming for 25, 26 as well. So the dream of Quebec rocks, the tailwind is here. And yeah, critical elements, Albemarle used to have these charts. It takes 15 years to get a mine, from exploration into production. Well, you're in year 13 or 12, so it perfectly fits that. But if you think about it, an investor who's looking at you for the first time, and the purpose of this video is in part to attract those first-time investors who say, okay, well, what value is still there? What should we focus on? Risk reward, valuation, probability, permitting. It's not DLE, it's not clay. It's been done before. You're not DMS, you are flotation, but flotation's used at Pilbara. Where else is flotation used? Mount Marion.
But there's some flotation at North American Lithium too.
At North American Lithium also. Okay, so it's not. I mean, we like DMS only, but DMS only, there's some waste associated with that. Your recoveries and are what?
We're at 87% recoveries for 5.5% grade. Very low mica, like we didn't talk about it, but the purity profile of the ore. We talk about very low iron content in the ore, but the fact that we have very low amount of mica also lead to high recovery. Hosting rock, like the pegmatite or ose and pergnite. Pergnite is similar composition, aluminosilicate. It's not like a volcanic or ultramafic rock that will impact the recovery with tons of iron. That's what we've seen in other project. So that the quality of the project and the quality of the ore lead to very high recovery.
That's great. You're right. I forgot to bring that up. The news here is the permitting, and you're ready to go. And all of the stuff on the quality of the asset, is in your presentation deck, which we would encourage viewers to review. But the fact that it's higher recovery, it's a little bit more expensive, but it's less waste. It's a cleaner, it's very high ESG profile from the fact that you're using so much more of the material. And then of course, you got the hydropower and all the greenness of Quebec. Do you plan to do an LCA, a life cycle assessment?
We are working on that journey, I will say, and we're making a lot of progress, and that's part of our plan.
Very good talking to you, and to be continued.